Hello, everyone. This is Scott Weintraub with Mortgage Quality Management and Research. I think you all know us as MQMR. And welcome to the very first episode of MQMR's Hit the MARC conversation series. Our goal is to bring on leaders in our industry, in the mortgage industry, and have a conversation, talk about the hot topics of the day, talk about where our industry is right now, where we think it's headed, and to give some practical tips, advice to all of you who may be out there working at a lender or a servicer. What can you do to both thrive and grow in this market or any market that we're talking about? And every week, every month, every time we do this, we're going to have a guest. And Rich, as you know, there can only be one first guest on a conversation series. And when thinking about that, we said we got to shoot the moon. We wanted to try to get someone who is legendary and iconic, and you fill both of those things. For those of you who are listening to us, I know all of you know Rich from Onward Upward Consulting. You know him from all things Ohio and the Ohio MBA. You know him from the Big Picture podcast and probably many other places, including your own vast social media presence and following. Rich Swerbinsky, welcome to Hit the MARC.
Damn, it was quite an intro. Yeah. Thank you. And yeah, looking forward to the conversation. Honored to be the first guest. And yeah, I love talking about our industry, and let's get into it.
Absolutely. So there's so much to get into in our industry, as you know. One quick thing, though, first, I think you and I have something in common outside of the mortgage industry, which is we're both big sports fans. Mm-hmm. And I was very much following the World Cup that just recently ended. And I know you were, from following all of your posts about it. I just thought, just to take a quick minute, any quick, wrap up thought about the World Cup, either overall or the United States' journey in the World Cup. When you look back now, what do you think?
Spain, wow, what a performance. I think they had 7 clean sheets in their 8 games and made France look silly, beat Messi in extra time when everybody thought God was on his side. So what a performance. I wasn't on them. I don't pull for Spain, but you just couldn't help but just be so impressed with them by the end of that tournament. I thought the tournament was great. I thought America did a great job as a host, as did Canada and Mexico. The United States team, it met their expectations. The pool play was probably a little better than we thought. And yeah. And then, the bracket, the first game was great. And then we had the Belgium game. So, back to the drawing board. I did feel like we did progress forward a little as a soccer footballing country. So we'll see what happens. I just saw today they're probably going to re-sign Pochettino through 2030
to keep coaching. Yeah. Well, Rich, thanks for that. I would just say a couple things. Number one, I was equally impressed with Spain. When you play 8 matches and allow 1 goal, that's stunning. That's absolutely amazing. And I think you're right. There was this dichotomy with the U.S. There were matches that they played where you think this gap is not that big of a gap. And then sadly, they played a game at the end where you could walk away from that thinking never in a million years. Right. So, but we'll see. We'll see 4 years from now. It was certainly fun to watch. I will also thank you for all your posts and teaching us how to wager responsibly. I hope it worked out pretty well for you. I think it did.
Yeah, overall, right? Positive.
Positive.
Was up to a great start. France screwed me, but
yeah, I thought France was the best nation as well, at least going into it. So I was surprised by their loss to Spain. Yep. All right, Rich, we could talk about sports and soccer all day. We won't. Let's get into what's going on in our industry. I thought let's just start sort of at the top. When you think about where we sit today, what do you think is the biggest story in our industry right now?
I hate this. It's obviously just rates and affordability. This just, this quagmire that we've been in now for years. This year was even worse because we got off to a good start to the year. Jan and Feb were good. We touched 5.99 30-year fixed, and then geopolitical and rates, and here we are. So, I just think it's been a very frustrating year, a hurry up and wait year. It's a lot of money on the sidelines in the industry right now, and a lot of people from Missouri right now before they invest. Show me, because we're over 5 years into a bear market.
Absolutely. And we're going to talk about a couple of the things that you mentioned in a bit, particularly rates and our friends over at the Fed who had a meeting just recently that we'll talk about and digest that a little bit. I think you're right about affordability. There's so much data out there, for example, especially with first-time home buyers and how high the age is before someone can even get into the market, like pushing 40 for the age of someone buying a home. I think, Rich, when I think about it, I ask myself, how can someone afford a home today, right? Both the mortgage and the insurance, combining those two things together to afford a home, particularly that first-time home buyer who's never done it before. How do we as an industry, what can we do to help at least reduce that gap between what's affordable and what the situation is today?
I mean, there's like, what can we do? Nothing, unfortunately.
Yeah.
Sucks. I mean, there's a lot of things that the Fed and the government could do that they've decided not to do that could loosen up housing. I think the most important thing that we all as an industry have to do, and it's long game stuff, is just keep letting politicians know, the headwinds that face housing and housing finance, what that looks and feels like in, Joe voter, and just continue to educate lawmakers as to the things that have helped get us to this point of poor affordability and alternatives to get out, because we can't control rates, we can't control home values, we can't control minimum down payment. So I just think that leadership in our industry has to continue to be really vocal with people that can do things that would help.
Absolutely, Rich. I think I have two thoughts to add on to what you said. The first is, you're right. I think advocacy and education are critical, and critical at the level of government who can do something about it, right? Either with new laws or changes to existing ones. I think historically, and I think it's still the case, at least somewhat today, that consumer groups or people on the side of borrowers are getting ripped off. There have to be more and more rules governing lenders to make sure they don't do things that rip a borrower off. I think those groups historically always spoke the loudest, right? And so I think laws would get passed and then regulations would follow that are based on what those members of the government heard from those groups, and maybe not as much from the other side of it, that if you have too many rules and it's a barrier to entry or staying in the market for lenders, then there's no loans for anyone, right? Which is why I think the work that you and others do at the MBA level is so critical. That is our opportunity. And I would say to anyone out there who's not involved in a group like that, or not involved with advocacy, that is one thing that all of us can do to try and have some stake in this, or to try to talk to people that do have a stake in this, to say, we need to have more than one thing in mind at a time. Yes, we want to make sure that there aren't lenders out there ripping people off. That's great. It's crucially important. But at the same time, we want there to be an opportunity for people to have access to credit and home ownership. And it can't be so difficult that it's just not out there. And the homes can't be so unaffordable that people aren't even trying. Right?
I agree.
So and to that point, then let's talk about what just happened. Speaking of things like rates and what might lead to affordability, the Federal Reserve just met, and Rich, as you know, for the 5th consecutive meeting, the 5th time in a row, rates were left unchanged. So although I think that may be the actual action, or I suppose you could say inaction, because they didn't do anything, they didn't raise it or lower it. I think that's only the beginning of the story, and I think there's a lot more behind that. The first thing is, though, before I get into that, what did you think of that? How did that align with what you expected, that they did nothing?
Yeah, I mean, it was totally what I was expecting. They can't lower rates right now with what the hell's going on in Iran and inflation, and and I don't think raising would be smart right now either. Three of the board members could vote for that, but yeah, it was pretty much exactly what I expected. So
I think I did as well. It was interesting because you just said where I was going next, which is not everybody was in agreement with doing nothing. Right. There were three members of the board, including Beth Hammack, the president of the Federal Reserve right there in Cleveland, in the great state of Ohio, who actually wanted to raise rates to combat inflation. Right. But I think, Rich, when I think about the meeting that just happened and trying to unpack it, there's that expression, actions speak louder than words. And while the action that happened was rates were left unchanged, I think the words that were spoken by Kevin Warsh after in his press conference actually were more important than the action. So I'll tell you why, and I'm interested in your thoughts on it. What Kevin Warsh said, and by the way, full disclosure, I have to always give him some grace because he went to Stanford like me. So a little bit of a soft spot for Kevin. But what he said in his press conference afterwards was a couple things. But the thing I want to talk about first is he said, rates, particularly rates in our industry and mortgage, should be dependent on what's happening in the market and economic data, not on the Fed and their monetary policy. I was wondering, if you heard that or any thoughts you might have about that, and then I'll share mine.
I agree with him.
Yeah.
I like Warsh. I was in favor of him getting the job. I've always been a fan of him and his criticisms of the Fed. I think that the current Fed structure that he's trying to shake up is ridiculously antiquated and idiotic, and it's been the same for 60 years for no reason. And they're looking at old, stale data. It needs completely shaken up, and I love what he's doing.
I think you're exactly right about that. And I like what he said as well. I also think it was funny that he said, I thought going into it might be a family fight, and it turns out that that's what I have. So it would be great to be a fly on the wall in one of the meetings that all the board members.
It's better than, all these people just, Jerome Powell, as he was just the idiot, was just inflation is transitory for a year after it was obvious it wasn't. And all these Fed board members going lockstep with him, these unanimous votes, one after another. I would much rather have debate and critical look at things and not letting one ineffective Powell, in my opinion, leader, set the tone for all this. I love what Warsh is doing.
Absolutely. I think before it was, the definition of insanity, doing the same things over and over again and expecting a different result, which we weren't getting. So what I like so much about what Kevin said is, if we think about it, it's been 5 meetings in a row where they haven't done anything with rates, right? But in that period of time, it's not the case that mortgage interest rates have stayed exactly the same, right? They've continued to go up and down and fluctuate, which I think leads to something that people who put so much stock into, the Fed's going to meet, right? And if they raise rates, then mortgage rates are going to go up necessarily, right? And that's going to be bad. Or if they lower rates, then mortgage rates will immediately come down, and that will be good. I think 2 things. A, that isn't exactly how it works. And B, what Kevin Warsh was saying is that ought not be how it works.
Yeah, it should. Right.
Right?
Yeah, exactly.
It does. So I'm interested to see where they go from here. And I think you're right, by the way, about inflation. I think that was the biggest reason why there were the 3 dissenters who wanted to raise rates to combat that. I think that could be a way to help with affordability. Obviously, I think if inflation was lower, but we'll just have to see what happens. And we're going to get into this a little bit later, Rich. I think instead of wanting the Fed to do something that will then somehow magically have an impact to lower rates and make things easier for everyone, I think we as an industry need to decide, what can we do outside of that, right? It's not that. That's not the basis for it anyway. It ought not be. So we'll continue having a conversation about that. So, okay. So I want to switch gears a little bit and talk about what lenders can do in a market like this one. And I know you work with them, you work with companies all the time. And a lot of them, if we talk about independent mortgage bakers first, if we talk about them, when you talk with people at IMBs, or if you were to talk to them and they were to ask you, Rich, what can we do to first just survive in a market like this, or how the market has been, or we want to grow, right? We want to grow and thrive. What's some advice that you give an IMB?
Well, it's tough to answer that because with IMBs, they're like snowflakes. Everyone is different. It all depends who owns the company, how much cash do they have, how smart are they, and what's their stomach for the business long term, right? Look at the companies that have grown the most, the IMBs, the last 3-4 years through the teeth of this shitstorm. Cross Country, Ray,
Sure.
CMG, Union Home are the four that immediately come to mind. They've consistently grown purchase market share. What do all four have in common? They all have a single owner with more money than God that knows the mortgage industry. And so they can pay signing bonuses for people. They can retain good employees. There's a number of other things too. So, the IMB world to me, it is such a balance sheet business, the mortgage industry. So, it all just depends, like who owns the money, how much cash do they have, and how smart are they really, how willing are they to stay in the business? If you don't, if you're just like a $20-30 million a month IMB that doesn't keep servicing, that has no ancillary services, and you're just like depending on origination income, it's very difficult, very, very difficult. So, to me, IMB part of the industry, we've seen what's happened. A huge chunk of the small to medium ones have been eliminated from the industry. The big guys have all gotten bigger, right? So where does it go from here? We'll see. I think all the big guys getting bigger, it does give an advantage to small, nimble, own your zip code, know your zip code. But you have to have something going for you. You either have to have an owner that's willing to invest into the company, or something unique about your business model, that makes you different from your other, kind of small to medium sized IMB competitors. So,
Rich, love that answer. And I think there's a lot to unpack with what you said. So the first thing that I liked about it is I think you're so right that it's really important to have someone at the top who knows the business, right? And what that will help them do is for that company to make good decisions, right? And you're right, having money helps. I think it's really when you have both together, though, that you can be successful, right? Having money is great. I'm just going to use a sports analogy, right? I'm a huge Dodgers fan. The Dodgers have all kinds of money. But I think the big reason they're successful is because they also make good decisions. There are other teams out there that also have a lot of money and they don't make good decisions and they're not successful. So I think combining the two things that you said, someone that has that knowledge, right, at the top, that has money, that's great, but also can make those good decisions. To your point, how do you have a culture where you're keeping good employees, right? Filtering out the ones that are hurting you or not helping you, but retaining the ones that are helping your business grow and be successful. I think that's crucially important. You mentioned a second thing, which is trying to diversify what you do, to have more than one way to make money, right? And you mentioned an example of a way to do that, which is to retain servicing. So I think there's a lot of good points in there, and that's how a company can succeed in a market like this one. And then, of course, you mentioned some of those countries like Cross Country as an example. There's been a lot of acquisitions, mergers, depends on, how from a PR perspective they write it, either buying out, merger, whatever you want to call it. I think, would you agree, Rich, that I think likely, at least in the short term, we're going to only continue to see more of that?
As long as the market sucks, yeah. I mean, people are just getting slowly bled out. Like every July was a horrible month, horrible for the industry. The applications, closings, everything. I mean, I think every time, it's been over 5 years, right? So again, if you got an owner that's loaded and he doesn't care that he's breaking even for 2 years straight, then it doesn't matter. But if you have an owner that is sick of losing a little bit of money every month and working his ass off, so yeah, the M&A climate will be defined by the interest rate climate. If interest rates stay in the high sixes, we'll continue to see M&A.
I think that's right. Right. And the people that are able to work within the confines of that reality are going to succeed. So to that point, so we talked a lot about how companies can grow and thrive, right? Bringing in good people that will bring more business in to your company, help do more volume and fun. Another way and another aspect that companies should be thinking about is also trying to control their costs, right? And so in thinking about that, one way to think about that is either doing everything yourself internally, right? Hiring more and more people to do everything, or to use third-party vendors that have expertise. So to that point, Rich, I thought we could talk a little bit about in this, because there's a lot of vendors out there, and they range from vendors that provide a lot of value and are extremely helpful to a company and can help them meet their goals and initiatives to grow, or there are ones out there on the other end of the spectrum who won't help your company do that. So let's just sort of start at the top. Rich, what do you see as the role of vendors in the marketplace in our industry?
Well, it's evolving quickly right now. I mean, there's been obviously a ton of consolidation in the vendor space. If you look back, like 5 or 6 years ago, there was, I mean, a lot of vendors that were trying to do a lot of different things. I feel like AI has made, a big segment of vendors less or non-viable. At the same time, they're critical. Like I would say for a small IMB, outside of being able to recruit and retain good people, which is always the most important thing, like the decisions that you make on vendors is hyper critical for small to medium size, especially IMBs. A bank can withstand a couple bad, vendor decisions, but I think on the IMB side, it's really important to have good, smart people that are constantly assessing the vendor climate so you can make good, smart decisions on keep it in-house versus outsource it. The AI space right now, like it's evolving so quick. It's, I mean, if you see a demo on somebody, like a month later, it's not viable anymore. I mean, at least to me, I would want to see it again if I was interested in it. So I just think it's, it's more obviously AI based. It's been consolidated a little bit. I think the criticality of good vendors, especially the small to medium sized IMBs, is really, really important. And and I think a lot of big lenders, you've seen them take more stuff in house just as like a byproduct of scale. So
yeah, Rich, I think you're right. I think there's two big pieces there to unpack a little bit. One is right. What are the good circumstances or where a vendor can really have that value? And to your point, especially I think with small and mid-sized lenders. And then the other is AI. So let's talk a little bit more about both. So here's what I think about vendors. I think you're spot on. I think the biggest thing that I see where a company is not using a vendor, where I think they could be better off if they were, is when it's something that requires particular expertise or a skill set. And what I see instead at the companies that aren't faring as well is instead they're taking someone internally and sticking them on that thing, right? Either because they want to find a role for that person, or they think it's cheaper to use someone that's already working there versus bringing in a vendor. And it is often the case, as you know, Rich, those things that companies may just be sticking a person on are really important. Number one, and you can have all kinds of issues, compliance and otherwise, if you're not doing something right, because the person that you're putting on it doesn't have the experience, right? Not that they're not trying, but they just don't have the experience to know everything that they need to know. Or the company might not be doing things as efficiently or effectively as they can, because again, the person or people that they're putting on it just doesn't have that expertise. That's where, to your point, Rich, if I were talking, especially to a small or mid-sized lender, and they would ask me, when do I do something in-house versus when do I do something with a vendor? what I would say is one of the biggest factors is what is the skill set or expertise that is needed, right? So if you're talking about things like compliance and managing risk, if you have an opportunity to use a vendor that has a great deal of experience with it, you can get what I call the gold standard, which is you can get better value for less money. Right? Because you could stick someone internally in some six-figure position to do all your auditing and risk management for you. But if they've never done that before, they're going to miss not just one thing, but many things, right? Where that could be an opportunity for a vendor to come in with a team of people that have the expertise that you need, but will actually cost less as well. So for me, I don't think it's just a situation where, well, anytime we use a vendor, that means we're spending more money. That's a premise that I don't accept, right? Where I think the reality is it can actually save you money, but also get your company better value, and help your audits go better and help your company grow and thrive. So I think there is a place for vendors. To your point, Rich, I think it's just like what you said about having a good person at the top, so that knows the industry, so they'll make good decisions. With the use of vendors, I think it's the same thing. A company can have vendors really help them and add a lot of value if they make good decisions about what are the areas where we want to use a vendor, and then B, picking the right vendor once they make that decision.
Absolutely. Yeah, no, well said. I agree with all of it.
Yeah, perfect. So the other thing you mentioned was AI. And I want to give you one thought that I've had about it, or that I've been telling people, but would love to hear what you think about it, the state of AI, and then maybe we'll talk a little bit about the future. Obviously, I talk to a lot of people who wonder if AI is going to take people's jobs away. What I think, Rich, is not quite that. I think something slightly different from that, which is I don't think AI is necessarily going to take a lot of people's jobs away. However, what I would say is if you're an employee working for a lender or servicer today, and you are not willing to embrace AI to help you, then you might be replaced by someone who is. What do you think about that?
Yeah. I mean, if you're in a job where it can make you better,
Yeah.
company's idiotic, right? Like,
Yeah.
I mean, it's advancing so quick. It's super powerful technology. People are losing their jobs right now because of it. I mean,
Yeah.
It's certain types of jobs. I do believe that, it's going to be able to create new jobs in new emerging sectors that, are probably better paying. And so, that's the part nobody talks about. It's, the sexy headline is to talk about, like, the contract lawyers and loan processors and coders that, are getting laid off. I mean, those positions have really been already kind of made obsolete by even the current still evolving levels of AI. I mean, my company, I have 4 employees. I should have like 12 to 15 based on what we're doing. I have 4. So it saved me a ton as a business owner. I mean, it allowed me to be solopreneur for way longer than I thought, than I otherwise would have been, because I was able to do more myself. And then my team, I mean, basically my interviews are about AI. I could anybody to do anything. I could, it's like, are you resourceful? Do you know how to use modern technology? Can you do the work of 3 people instead of 1? That's what I want to know as an operator.
Absolutely, Rich. It's so interesting that you say that, because I think that's that with AI, it's a new version of something that I think existed before. I've always felt that a way to be successful, really at any job or at any company, is to try to make yourself indispensable. Right. Yeah. And if you're indispensable, you're not only going to stay there, you're going to have opportunities to do more things. It used to be, I think back maybe when you and I started out in the industry, and I bet your experiences were similar to mine, is that people like us would wear many hats. But what that meant, and because you just said, for example, doing the work with 3 people, I think people used to do that. It's just they were doing all the work themselves, right? Of 3 different people without tools like AI to help them do it. In the modern day, being able to do the work of 3 people is something that AI can help do, which is why, as you said, you're able to operate with 4 people instead of 12, which is amazing, right? And I think that's a way, going back to the part of the conversation we had about another way companies can be successful, is to control their costs while they're trying to grow volume and margin and profit and all of those things, but to try to control costs, and AI can help do that, right? So I think it really goes together with what a person can do trying to make themselves indispensable. And I think AI, while there might be a company like yours, for example, you need fewer people because of AI than you might otherwise have needed. But rather than people think, well, a whole bunch of jobs will go away or I'm not going to have a job, I view AI as an opportunity for someone to be able to, immerse yourself in it. And again, find ways that you can be indispensable, whether it's at the company you're currently with or with someone else.
Makes everything you do better and faster.
Yeah.
Who doesn't like that?
Absolutely. But the one thing you mentioned, you have 4 people and not 12. So what you don't have is 0, right? Or just you, because one of the things that I know is while AI is very helpful and it is getting more and more helpful all the time, it's not perfect, right? And one can't just take information that you see or find or that comes out of AI and use it without looking at it. And I will tell you, from the companies that we talk to and work with all the time, or just what you read about, is a danger, at least right now. I think it always will be to some extent. AI is going to keep getting better and better, but it's not perfect. And you can't just, for example, if you're writing a policy or whatever you're doing, or even when you're putting loans through an AI underwriting tool, you can't just say, well, it spit this out and that's the end, and we don't have to look at it. And so I think what's going to be really important, and as you know, Rich, there are now some rules about this. Fannie Mae has requirements out there. Freddie Mac has requirements out there. Well, actually, Fannie Mae's are effective right about now. Freddie's have been effective for a few months now. So a company out there just can't use AI. First of all, you have to document and know all of the different ways you're using it. That would be one thing I would say to companies out there. Do you actually know all of the ways that you're using AI? And that includes vendors that you use. If they're using AI tools as part of the services that they're providing for you, that's number one. Does the company even know all of the ways they're using AI? And then, do you have policies and procedures around it? So I think, Rich, that's where I find the place where a lot of companies are right now. They know they're using it. They might not know every way or every facet in which they're using it. But I think the next step is, what controls do they need to have in place around it? What testing needs to be done? And all of the things, while that sounds like work or extra work, I think what it can lead to, though, is being able to maximize the benefits of it going forward.
Yeah, I think AI governance is one of the hot buzzy things right now, right? Because if you're a small IMB and you're struggling to make money, if I was running a small IMB right now, I would be embedding AI into every goddamn of my company as fast as I could, to help, just be more efficient. So, but to that end, like, what are the risks around that, right? You're dealing with customer data. You don't know about the rogue LO that could be putting NPPI on his own person or her own personal laptop, So, and the industry is they're trying to figure this out. Fannie and Freddie finally have put some things out there. MBA is trying to figure it out. ABA is trying to figure out. Other groups every major group in the industry is trying to figure this out. Now, the Mortgage Collaborative just created an AI council, because this is hugely interesting to lenders, right? They understand the power of the technology is massive. And when like AI people, when they look at the mortgage industry, like, we all think the mortgage industry is so complex. They look at the mortgage industry like, this is not that complex.
Right.
AI is running far more complex industries than the mortgage industry right now. And it is really ripe to be helped from an efficiency standpoint by AI. But to your point, there's not really any rules around it yet. Like, what do you do as a company to protect yourself? What policies, procedures, protections, and protocols are Fannie Mae and Freddie Mac going to want to see if they are going to continue to buy loans from you? The other counterparties in the industry are going to start asking for AI governance policies. So it's something that's emerging really quick right now.
It is. And I think, Rich, there's only going to be more of it, to your point. So first of all, Fannie Mae and Freddie Mac, they're going to go out and audit companies, right? And now that these rules exist, they will be auditing to them, and they will be asking lenders and servicers, show us, first of all, your list. And they'll say, what list? The list of all the ways you're using AI, right? You and any third parties that do work for you, all the ways you're using AI. Then, to your point, what policies, procedures, controls do you have in place around that? How often are you testing your AI models that you're using, right? Is there the potential for fair lending and discrimination issues? Are you even testing for those? Would you even know if there was bias in any AI algorithms that you're using? So I think it's emerging. I think there are states that have laws. Colorado has one, I think, that's pretty strict. There will be others. There could at some point be federal rules. Hopefully that would provide more clarity, not less. As you know, Rich, that doesn't always happen. Rules that are intended to provide more clarity sometimes only create more confusion. But Rich, we only have a few minutes left. I have two more things to ask you about. One is, as you know, there is a nominee out there, Brian Johnson, to be the permanent, at long last, after having an interim director at the CFPB for a very long time. There is a nominee now to be a permanent director of the CFPB. In fact, it just happened that the litigation about all the rifts, all the layoffs that the CFPB did, the judge said, I'm pausing this litigation until we know what's going on with the confirmation of Mr. Johnson. So, Rich, really, neither of us has a crystal ball, but let's assume for a moment that Brian Johnson gets confirmed and we have a permanent director of the CFPB. What do you think the next 2 years of the current administration, what do you think the CFPB will look like with a permanent director over the next year or two?
It's hard to say. I've heard good things about Johnson, and he was the assistant to Kathy Kraninger, who
for a long time.
She was the one sane CFPB director we've had. So, to that end, it is positive. I am a believer that we need a CFPB in this industry because they protect the small to medium-sized lenders, and small to medium-sized lenders, are good for consumers because they give options and everything doesn't get, steered / referred into these big lenders that are doing these mega deals with real estate brokerages and, just getting bigger and bigger and bigger. So I hope that we see a revitalized CFPB. I can't see it though. I mean, come on, with this administration, just being honest. I mean, even when, I think that, when Kathy was in there with Trump 1.0, it was a little bit different, situation. They've killed the CFPB off. I mean, there's like 6 dudes in a folding table basically now. So, and he never did that. I don't know if he had the ability to do it. So, I think it'll be probably more hires and probably some more base layer of oversight. But, the thing I hate is like if the White House changes in 2 years, then he's going to be gone. You're going to bring somebody else in that's going to have a different MO. We just need some kind of oversight in this industry right now. I have never seen more illegal shit going on in my life. Pay to play and just RESPA and
all over the place.
It's insanity. And it's hard enough for small to medium-sized lenders to compete without having to deal with just rampant, barely legal or not really legal practices that are just going on everywhere. So,
Rich, I agree with you 100%. And by the way, as someone who spent a career in compliance in this industry, it warms my heart to hear someone say, yes, we need a federal regulator that actually has teeth and that will do something. So I agree with you. I think we need it for several reasons. One is what you just said, that there has to be someone watching and protecting consumers and trying to level the playing field such that lenders trying to do the right thing don't have to compete with people who aren't complying, right? That's a huge thing. And then number two, we've tried as an industry, I think, or we've been in situations where it's been up to us to police ourselves. And that hasn't historically worked out very well.
The mortgage industry will never police itself.
Never police itself. No.
Never.
There will be this percentage And the fewer rules there are, the higher that percentage will be of people that won't follow the rules. That's right. So I think it's a positive that there'll be someone in place, right? But I agree with you, over the next couple of years, while this administration is still in office, I think it's going to be pretty minimal in terms of the number of audits that they're doing and what they might be enforcing, if anything. We already know, for example, on the fair lending side, they're not really looking at disparate impact. It's only if you actually mistreat an individual consumer, they'll cite you for that. Of course, they'd have to audit you first in order to find it, to cite you for it. But I think you mentioned, Rich, this pendulum. That's what worries me the most, or what I would like to see different, especially knowing that we think there's at least going to be a CFPB. What I would like to see is something that we can have more certainty about. Not that 4 years, if it's a Democratic administration in office, then you have disparate impact or any of these other theories. And if you have an exam, you have to worry about all these things. Or then if it's a Republican, then you have the next 4 years where you don't have to worry about it. That makes it hard, right? The more certainty there can be, I think the better off the industry will be as a whole. And I hope that's a place where we can get to. It really hasn't seemed to happen very often, but I think when there's not much clarity, then that's the hardest part. So I hope there can be more clarity. We'll see what happens. All right, Rich, before I get you go, I want to say two things. First, a huge thank you for being our guest on Hit the MARC. It's been wonderful having this conversation with you. So my last question for you, I didn't tell you about this in advance, so I'm about to put you on the spot for the one and only time in our conversation. I hope we started out talking about that we're both fans of sports. I am also a huge fan of movies. So, Rich Swerbinsky, my last question for you is, what is your all-time favorite movie and why?
Oh man, that's tough. I mean, I think what immediately comes to my mind is the first Godfather, Saving Private Ryan. To me, it was incredible. I love that movie. I'm forgetting a few that I love. I'm partial to Major League because I'm from Cleveland. Was a legendary film at the time that was about my team. So, but I don't know. Lost in Translation is another one of my favorite movies of all time with Scarlett Johansson and
Bill Murray.
But I'll go officially. I mean, The Godfather Part 1 is really pretty damn close to a perfect movie, in my opinion. I'll go with that.
It is very difficult to argue against that being the very best movie of all time. That's what I'll say, Rich. So thank you for the answer. Before you go, is there anything you want to share with us about what's going on in the great state of Ohio with the Ohio MBA? I've seen you posting about, I think it's Christmas in July. Is that what's happening? I've been following that. Tell me what's going on in Ohio.
We're blowing up the Ohio MBA is what we're doing.
Yeah.
Fun. I mean, it's a 60-year-old organization that had been a little dormant, a little sleepy the last few years, and had an opportunity to come in and help jumpstart it about a year ago, and it's been so fun. We just had our conference a month ago. We had 78 people at conference last year. We had 240 this year, and we're doing a second event, December 7th and 8th in Columbus, Ohio, called Home for the Holidays. It's going to be a 2-day mortgage conference that is going to feature a massive Christmas party on the evening the first day. So we're really looking forward to it. OhioMBA.org. You can see everything we're doing. We do a lot of virtual events. We do a lot of in-person events, and it's been a fun revitalization.
Well, Rich, I see you. I see what you and your team have been doing. It's fantastic. I know at the conference earlier in the year, MQMR was represented. We will be going forward. It's only my hope, though, that a lot, or at least some of that representation will be me in particular, so we can have more hang and FaceTime in person. So, all right. With that, Rich, you survived the gauntlet of the Hit the MARC conversation series with flying colors, I might add. So, again, thanks so much for spending some time with me.
I appreciate it, Scott. Thanks for having me.
All right. Thanks, Rich.